Hello everyone, Darren at Leviathan here, talking to you from the CME Trading floor. So, today was non-farm payroll day, and overall it was a pretty strong jobs report, adding 115,000 jobs in April, above the 73,000 forecast, but still well below what we had in March. Job gains were mostly seen in healthcare, transportation, and warehousing and retail trade, while federal government employment continues to decline. However, of course, the focus is all on the Iranian war. Uh, Crude currently pretty much unchanged. The S&P futures are toying with that 7,400 area again, currently marking up about 35 ticks. Treasuries are firmer this morning, so implying rates are lowering. The chances of a hike coming in for the end of the year reduced by 25% compared to yesterday, with the DEES contract up 5 full ticks. So on the news, we've got things like the IRGC Navy warned vessels to stay away from US warships in the Strait after overnight skirmishes, with completely different kind of reports coming out of each party. So who knows really how good or bad it is going over there, but the Rubio did say that the movement of US troops is a decision for President Trump to make, and we are waiting today to see the official Iranian response to the one-page continued peace deal offered by the US earlier this week. We have next week to look forward to the US CPI, PPI, and retail sales, and also the Trump-Xi meeting at the end of the week, next Thursday to Friday. But for now, you are coming into a firmer stock market. It actually just breached 7,400, lower rates, and a pretty flat crude market. Volatility is already starting to come off. I was expecting it kind of to hold a bid. Don't expect it to come in as much as normal, as there is obviously that overnight or weekend risk coming in for what could possibly happen in the war. So that is going to be, I think, take precedent over anything else. I did have a quick look at things like upside in crude. I mean, our system just saying if you want to or expecting moving upwards, it's just buy some outright calls in December. WTI complex. If you're expecting it to rally, if you go out as far as December, the futures are still implying that things get sorted out and as well below the where the front month is currently trading. Like DEES is trading about $78, depending on what your belief is basically implying that this will be sorted out sooner rather than later. And so maybe it'd be worth having a look, and we can look at this later around lunchtime in the S&P to see whether or not there's some decent upside trades. We're looking at downside trades yesterday, maybe targeting 8,000 towards the end of the year. We'll look at September and December. We'll do that around lunchtime and see what the best trades we could put on for that is. And if that's going to be the case, also potentially in the SOFR, short-term interest rate market, maybe going for unchanged rate plays. These seem the most obvious plays in pretty much all the complexes. So it'll be a hunt for the best trade, which is what our system is expert at, to be able to get you the best ROI. Anyway, a fairly comfortable opening for you on this non-farm Friday. And so, as always, better be lucky than be good. So, best of luck to you all.